All right, before we jump in, just the standard but very important reminder. This is all for educational purposes. It is not financial advice. Every investment has risk, so you've got to trade at your own risk. We do these deep dive stock analyses regularly, really just to share what we're learning.
Okay, let's get right to it. Today, we are breaking down Taiwan Semiconductor. You know them as TSMC, ticker TSM. We're going to go deep on a fantastic research report from Lapis and pull out a complete, actionable swing trade setup for the next 30 days.
And look, we're not going to bury the lead here. The bottom line, the big takeaway from this entire report is a cautious, bullish signal. Now, this phrase really sets the tone for everything we're about to talk about. It's not a simple go buy it now signal. No, it's a signal to buy smart. It's telling us there is a massive opportunity here, but you need precision, you need patience.
And that leads us to the big question, right? The whole point of this analysis. We've got a company with just incredible bullish fundamentals, but the market's throwing up some caution flags on the timing. So what's the play? How do you trade that? Well, that is exactly what we are here to map out step by step. So first things first, before you can even think about placing a trade, you have to understand the animal you're dealing with. Let's just quickly establish why TSMC isn't just a big company. It's an absolute titan.
I mean, just let these numbers sink in for a second. TSMC isn't just a market leader. In many ways, it is the market. We're talking about a 70% global share. They make the critical, high-end chips for Apple, for Nvidia, for AMD. And when you get to the most advanced stuff, the 5-nanometer nodes that power the tech you love, they've got over 90% of that market cornered. This isn't just a company, it's a foundational piece of the entire global economy.
And that kind of dominance, it doesn't just sound good, it translates into staggering financial power. The numbers here absolutely justify the long-term bull case. So let's take a quick look at the earnings.
The growth here year over year is just wow. Take a look at these Q4 2025 results. Revenue shot up over 25% in US dollars. Their gross margins are expanding, but the real headline here, the knockout punch, is the net income, up a massive 35% from the year before. This is a company that is absolutely firing on all cylinders.
And if you think that was good, this gives us a crystal clear picture of where they're headed next. The company's own guidance for 2026 is projecting around 30% revenue growth for the whole year. And look at those gross margins. They think they can push them even higher to a stunning 63 to 65%. That just screams pricing power and efficiency.
But here it is. Here's the engine. This is what's behind all that incredible growth. The report projects that their AI-related revenue is going to grow at a compound annual rate of 54 to 56% all the way through 2029. That's the jet fuel for this stock. The demand for AI chips is just insatiable. And guess who's building them? TSMC.
Now, I know what you're thinking. You look at the valuation, you see a premium, and you think, is it too expensive? But listen, context is everything here. A forward PE of around 25 for a company projecting 30% top-line growth, that is incredibly reasonable. The market understands. You have to pay a premium for this kind of world-class quality and growth.
Okay, so the fundamental story is rock solid. Now let's switch gears and go to the charts. Does the price action actually confirm the story these amazing numbers are telling us? Let's take a look.
Oh yeah, absolutely. The chart is screaming strong uptrend. It's trading well above all the key moving averages, the 5-day, the 20, the 50, and the 200. And you see that little golden cross down at the bottom? That's when the 50-day crosses above the 200-day. For technicians, that is a major long-term bullish signal.
So this is our battle map for the next 30 days. These are the levels you need to have on your screen. We've got major resistance right at that 52-week high around 380. If it can break through that, the door opens to 400 and higher. To the downside, we've got key support levels, think of them as safety nets, at the 5-day moving average around 365 and the 20-day around 350. These are the levels we're going to build our trade around.
All right, just a real quick pause here. If you're getting value out of this breakdown, do me a huge favor and just smash that like button, subscribe to the channel, and maybe share it with someone who trades. It really does help us out a ton. The full in-depth Lapis research report is linked for you to download in the description, and while you're there, you can find links to join our communities on Twitter, Telegram, and Reddit. Okay, so far everything looks incredible, right? Amazing fundamentals, bullish chart. So why the cautious part of our cautious bullish signal? Well, this is where the story gets interesting. We need to look at the outside world.
And this slide right here basically lays out the potential minefield for the next month. The big one, the one with high impact, is the new U.S. tariffs that just went into effect. That creates this cloud of uncertainty. The other huge event is the February monthly revenue report, which should be out around March 10th. A really strong number there could just blow right through any of the tariff concerns.
So let's just drill down on that main risk. A new 25% tariff on certain AI chips just hit, and that's making the market a little nervous. But, and this is a really big but, there is a major factor working in our favor. The new U.S.-Taiwan trade deal specifically caps tariffs on Taiwan at 15%, and it gives TSMC all these benefits for building more factories in the U.S. That provides a really significant buffer against the worst-case scenario.
So there we have it. We've got the bull case, we've got the technical map, and we understand the risks. Now let's put it all together. This is the whole point of the explainer, the specific actionable 30-day trade plan, straight from the report.
Okay, Plan A, the primary plan, is to use this tariff uncertainty as an opportunity. We want to buy a healthy dip. The ideal entry zone, our sweet spot, is between 355 and 365. This area lines up beautifully with that technical support we talked about. Our first profit target is 385, and a more aggressive target is up at 400. And crucially, we have a clearly defined stop loss at 340. We know exactly where we're wrong, and that's how you manage risk.
But hey, what if that dip never happens? What if the stock is just too strong? Well, for more aggressive traders, there's a plan B. If the stock shows incredible strength and gets a daily close above that 52-week high of 380, that's a momentum trigger. The entry would be right on that breakout, targeting the 400 to 420 zone, with a much tighter stop loss just below that breakout level at 370.
And these probabilities really help drive the strategy home. Look at this. The highest probability scenario, the base case, at 40%, is for the stock to basically chop around and consolidate. And that's exactly the kind of price action that would give us the dip we're looking for in our main plan. The bull case is right behind it at 35%, and that's where our backup momentum plan comes into play.
So to wrap all this up, let's just make sure we're not out on an island here. What does the rest of Wall Street, the wider analyst community, think about TSMC right now?
Well, they are overwhelmingly bullish. I mean, it's a sea of green. TipRanks has a strong buy. Stock Analysis has a buy. Major players like Susquehanna and Citi are all on board. And look at the price targets. They're all clustered right around that $400 to $410 mark, which lines up perfectly with our trade targets. Citi even has the stock on a special 30-day upside catalyst watch. They're expecting good news.
And that brings us to the final verdict from the report, which just perfectly captures our entire strategy. The conviction rating is a strong 7.5 out of 10. And the key takeaway? I love this line. Patience is key. Let the tariff dust settle, then buy the dip with defined risk. It doesn't get much clearer than that.
So, that is the playbook for TSMC over the next 30 days. Now, it's your turn. What stock should we break down like this next? Drop a ticker in the comments below. I read all of them. And please, don't forget, the link to download the complete research report is right there waiting for you in the description.
And one last time, just a reminder that all of this was for educational purposes. It is not and never is financial advice. You've got to do your own research and always trade at your own risk. Thanks so much for tuning in.